Those are some good ones. Yeah, well, let's get started. There's a lot of things that we can talk about. We'll talk about what's going on in the broad markets, the stock markets. We'll talk about trading ideas, but we're going to talk a little bit today about these commodities, this kind of commodity super cycle that we've been hearing about. I've got a couple of slides here for you guys. Gonna have to do some reading. And first of all, well, thanks Jeff and Jeffrey for joining us. Got to read this risk disclaimer because you know what? There's risk in trading. You can lose money. You can lose a lot of it. You got to make sure you understand what you're trading before you ever click that mouse because of the risk in trading. And so, if you trade on margin, you can lose more than you put in to the trade. If you trade with options and you're trading and you're selling those options, you can lose more than you put in. You just really, really need to understand. And so we come here week after week. We just show you the ideas and the ways that we're looking at the markets. And I just want to let you know that we do get paid for this. We get paid to come here and show this to you week after week on Ask the Pros. We don't do it for free. And I don't think you would expect that we were doing that for free anyway. So let's go forward here. So this is kind of what we want to talk about a little bit here, just the first part of this event, because I want everybody to be able to be informed about what this commodity super cycle is. Who are the players? What are the commodities that we're talking about? And then what are the opportunities? How can we make money from this? Because that's why we're here. And kind of what are the risks as well. So got a couple of charts here for you. And this came from Goldman Sachs. They put this out in December of last year. We've talked about it once before, I believe, here on Ask the Pros. And I thought this would be a great time to dive back into it a little bit more detail. And you just see, hey, it's dominated by the dollar in 2022. That was the graph on the left. And then CAPEX, which is capital expenditures across commodities, continue to fall in real terms despite the higher prices. And this is just getting into the opportunity. No supply response in sight while markets are divesting today. What's more startling is the lack of investment in commodities for tomorrow. I mean, supply and demand. We're not investing in it. We need them. What kind of opportunity does this present? That's what we're going to talk about. You can read that slide if you want to read that later once you look at the recording. Just kind of their stand. This is 2 paragraphs out of about 400 of the whole document. You can actually download it. You can Google it and download the whole PDF yourself. It's a decent read. It's got some interesting things in there. So we're going to talk about that because what we're really talking about is over here. I'm going to have to put my glasses on for this because I can't see that fine print. As I
You're getting old.
Join the rest of us. Wear some glasses.
Yeah.
This is like September 1 is like, my lights are going off, my computer's blinking out, and it's like, hey, let's go with it. So anyway. So we're talking about where my cursor is kind of on the left side there, that stage 1, that macro scarcity. And this is where Goldman Sachs is saying, hey, basically, this is where we are. The real opportunity goes from stage 1 to stage 2 to stage 3. And so we're really, really right here at the beginning of this. They're saying, the rising inflation, the rising interest rates, the price of the commodities becoming scarce, just the whole kind of supply and demand, companies investing in it, that whole kind of a process. It's maybe a little bit, maybe it's a lot to get your head around, but basically this is the opportunity that we're embarking on. So we want to talk about it a little bit. So kind of with that, Jeff and Jeffrey, what are your thoughts? Kind of like, when you think about this commodity super cycle, I know, copper or silver, the types of industrial commodities, what do you see are the important ones to be looking at if this commodity super cycle is actually in place? What do you think, Jeffrey?
Well, I've had a lot of members asking about this commodity super cycle because it's made a lot of news this year, actually. Mm-hmm. And I've kind of pulled individual charts. And when we talk about a commodity super cycle, it's the things that happened 20, 30, 40, 50 years ago aren't necessarily the commodities that we need for today's market. There are some variations as we go through this. Geof Smith may disagree with me a little bit on this, but
I always do.
It's not necessarily a blanket commodity super cycle. There's some things we need, some things we don't need, some things we need more than we did years ago. Like platinum, we're using a lot more platinum these days than we did 50 years ago. And then things like silver, we've been horrifically underinvesting in for a lot of years because we were running a glut of silver. Now all of a sudden we've evaporated that glut and actually taken up 2 years worth of, or the last, I guess, 10 years worth of, excess production in the last 2 years. And so I think there's opportunities. You got to be, like always, you got to be a trader and pick your markets, not just blanket. I'm getting exposure to all commodities because we're in a super cycle. I think it's always a trader's market. It's better to be in the opportunities over just shotgun approach.
Yeah. What do you think, Geof Smith?
I'm not going to disagree with him. How's that?
Okay.
I think there are. I mean, if you even look at, just like a base metal like copper. We've used copper for how many, thousands of years. But you look at the new EVs and stuff like that coming out. In a normal car, depending on the size of the car, you'll use anywhere between 18 and 35 pounds, 40 pounds, whatever it is of copper. And when you go to an EV, you're looking at something like 170 pounds of copper. That's a huge increase in the amount of copper. And even though they're producing or trying to produce the same amount, you're going to have a huge demand on that. And I think you're going to see copper be very, very strong in the long haul as well. You look at the what do they call it? The Inflation Reduction Act, which you can use any phrase you want to on that one. But anyway, but the one thing it does do is it makes the EV industry a whole lot more robust, right? And you're going to have that influence a lot of these commodities. You're going to have copper moving up. You're going to have probably, and I don't know if they're going to get into the uranium side of things, but I think they probably will. You've got everything that's going to go into one of those EVs is going to be probably going up, even batteries. You're going to see all that's going to be affected by that. So when I go back and look at a commodity super cycle, I'm kind of in the same boat Jeffrey is what we still need food, don't get me wrong. We got to have food, we got to eat. You look at India right now. India's thinking about not exporting rice. They want to keep it. That's going to hurt a lot in the world. You look at what's happened over in Ukraine. You look at even here in the United States. You look at our cotton crop right now. Our cotton crop was looking absolutely beautiful. Just as green and as lush and as pretty as can be. And then we get that heat superdome job thing that smashed onto us. We were having 105, 104 degree temperatures straight for 3 weeks with no rain. That doesn't do well for crops. And now you're starting to lose the fruit off of the bolls off of the cotton plants. So now what was going to be a great cotton crop, maybe not so much anymore. And you're seeing that really with the wheat, or not the wheat, but the corn and the soybean crops as well. They were looking beautiful. And now the USDA comes out and says, hey, 56% of the corn crop looks good to excellent, and 54% of the soybeans looks good to excellent. Well, that tells me that 44% don't. Right. So, that's the one thing everybody, they look at one side of the equation, but what about the other side of the equation? So what are they going to be doing with it? You're starting, and if we're going to have that decrease in that crop, you're going to see those things probably push out. I would suspect that we're going to be, right now we're in harvest lows, especially in wheat. We just finished harvesting all the wheat and everything like that. You probably still have some way up north that's coming out, but for the most part, the United States is done with their their wheat harvest. And you got wheat down here at the lows. This is very, very typical this time of year. It wouldn't surprise me if we don't see those same quote unquote harvest lows early this year for corn and soybean, because usually you have those lows going into October into November. It wouldn't surprise we don't see those lows here when they start figuring out we don't have as much as we thought just because of what we've got going. But I think, when we look at, we've already seen the commodities move up because of inflation. That we were looking at that. What was that? A year and a half ago, we were predicting that one, and we've seen that. Now the question is, are we going to have enough to feed the world? Do we have enough, of the base commodities to actually feed whatever industry it needs to go into? You can use a lot of these commodities for various things. Meat's meat, but and our exports are doing really well, but we've already had kind of decimated herds from the past droughts we've had in the cattle industry. And so now we're trying to figure out, are we going to start growing our herds back? Or are we going to start, depleting our herds? And that's the one thing that they're kind of battling right now. So I think, when you step back and look at a bigger picture, I see overall picture commodities probably moving higher. But we're going to have our ups and downs. We're going to have our normal, weathers, and it's going to be just a swing trade or day trade from here to here to here. Just take it as you get it. Nobody has a crystal ball. Nobody can tell you where everything's going to be in a year by any means, not with this economy and the world economy.
Yeah. That's good. That's good input. If you want to take advantage of, let's kind of maybe talk about some of the industrial commodities. What ways would you guys take advantage of? What are some stocks or some trade ideas that you would use to try to take advantage of that? Speaking more industrial, taking advantage of, the batteries, the lithium, the all the things that go into, the green energy. Or whatever, you answer it however you want to, but what do you think, Jeffrey?
I like to be selective. Right now with all the Bidenomics push, all the green infrastructure, inflation, whatever, blah, 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 oil got beat down a lot and kind of forgotten about, and it's being underinvested really heavily. And I've actually taken some strategic oil plays recently, looking for this to kind of potentially snap back up as we've drained our strategic petroleum reserve. It seems like the play is in EVs, but potentially it's in traditional oil and gas right now on a recovery. Well, not so much the gas. The gas, I think, is probably going to stay like that played out last year. And this year, it's looking like it might stay depressed, even though everybody knows it's going to go higher into the winter, but the chart says it's probably going to stay in a tight trading range at the bottom through the winter. But oil is indicating that we could see a pop, and gasoline, I was getting scared there. It was looking at like the price pattern was set up. It could break out to $5 or $6 on the future. And imagine what that's going to be by the time it made it to the pump with with taxes and everything added on. That's the nationwide futures price. We're not talking about like California where it could be like $10 a gallon. So I think it's smart to pick where people aren't talking about. Go the places that people aren't talking about and wait for the opportunity for the charts to bottom. That tends to be the way that I go at this thing. Copper actually looks slightly bearish right now to me on a macro week-long timescale. And I think we may have a little lower to go because everybody's hyped up on copper EVs. I think we may go a little lower on copper, but silver on the flip side looks like it has bottomed and looks like I'm long out to 2025 right now in a position of silver, looking for it to pop out maybe $35 an ounce. So nice. It's all about opportunities.
Exactly. Taking advantage of those opportunities. Geof Smith, maybe you could even take over the screen and show us, like some people are asking about UNG, but if you could show us some of those. But I'd like to know your answer to the question, as well. What kind of, stocks, products, what would you look at to take advantage of if you're going to try to play into any kind of super cycle or any kind of commodity move?
Well, I'm kind of picky and choosy when it comes to the stock side of things. I've always liked trading the futures just because it's easier. And silver. There it is. When you can go into SLV and various things. I like trading SLV, GLD. I like FCX for copper more than anything. But I mean, when I start looking at WEAT for wheat, I'd rather just trade the wheat futures because the SOYB, WEAT, and CORN, they just don't move very much. They really don't. And I just have, I mean, even though they're going to move along with that commodity, they just don't move much, and I don't think they pay you all that much. I think if you're wanting to kind of really dabble into those, maybe try to look at CAG, ConAgra, or something like that. Maybe you get a little bump out of there if you want an equity. But I would probably just go over to the futures or the micro futures, or I should say the minis on the grains, and trade those. Now they got options on those. You can trade those all you want to. So I think it's a little easier on some of these just to go with the actual commodity. I mean, Jeffrey brought up crude oil. Crude oil actually made a new year high today. I mean, if nobody realized that, we had a high up at 84.
I did.
Yeah. But crude oil made a new year high, and I was just like, hey, check this out. We're getting above $85. And so, and they've kind of pulled back a little bit off of that a little bit. One thing I thought was very interesting, though, with the rise up in crude going over to gasoline here, gasoline hasn't made that same move. Gasoline's kind of stayed down. We had a high just shy of $3 a gallon on gasoline. We're down here at 259 right now. So it hadn't had that same move up as crude oil has. But if you go back and look at how strong things are, when you look at gasoline and crude oil, crude's up 5% on the year, gasoline's up almost 5% on the year. So they're about the same up. So maybe that's what the deal was. But before, we were seeing crude negative on the year and gasoline up on the year. So maybe they were just kind of balancing that out a little bit. You still have natural gas down 35% on the year. I can see why Jeffrey's saying this ain't going up. I mean, natural gas, got slapped in this, and it all depends. And this is the big thing that I'm thinking of. I'm going to be really interested to see how, not necessarily our winter goes, but really how Europe's winter goes. What saved them last year was they had a warm winter, right? So they didn't have to import a ton of LNG. And right now, all the natural gas people are saying, we need to get all this LNG going over to Europe because they're going into winter. Well, if it's going to be a warm winter, they're not going to need all that LNG. And so I'm kind of anxious to kind of see how that's going to kind of pan out when it comes to natural gas. I mean, you'll usually see in a I guess a seasonally move, natural gas starting in about August into September will have a little rise up going into about October, middle of October, maybe late October, and then it kind of chills out a little bit and kind of sits and waits to see how our winter's going to go. And of course, we have a nor'easter whip through, it'll pop up a little bit and so on and so forth. But the thing is the larger demand. Is the larger demand now going to really need to go over to Europe because they need our natural gas, or are they going to be just fine this year? And I think that's what we need to really, really wait for, to look at, to see, if natural gas is going to get a bump, or is it just going to chill out and hang out down here? I mean, I was in the natural gas industry. I've seen natural gas down at $1, and I've seen natural gas up at $10. It's always been a really volatile market. It seems to like $2 to $3 a lot over the years, the decades. So being down here at $2-3, that to me, that's kind of a normal natural gas price. Always has been. So, but when you get it over $4 or $5, then I sit there and go, hey, this thing is getting kind of strong. But
hey Jeff, what do you think about the sleeper in there? Is China started exporting record amounts of liquefied natural gas to Europe too, and trading not in US dollars, so it's not showing up in the commodities market.
Right, they're trading it in yuan and euro, and so that's the thing. The petrodollar is getting weaker, and I use that term just because everything's traded in US dollars, but China's getting around the petrodollar. And I don't know what's going to happen into the Middle East if they start getting rid of our petrodollar, if you will, and start just doing currency to currency, which is kind of interesting to me. I mean, to me, it's kind of logical. You pay for things in the currency that you got, right? I mean, to me, that's kind of normal. And so maybe that's where Bitcoin really comes in, because, hey, Bitcoin's kind of a universal thing now, right? Everybody can use Bitcoin. So maybe that's where that kind of steps in a little bit. But I think that, we'll probably see, I mean, if we, especially on the dollar index, we went down and hit, what was that, 98 something, and then it bounced back up here to about 105. If we get back below 102.5, we're probably going to start moving back down in the dollar. If it takes out that 98, what was it, 98 or 98.79 or whatever it was when it hit that low down there. If it takes that out, I think the dollar is going to die off, and it's going to continue to push on down. Now, does it go back to where it was back in, what was that, 2008, 2009, down there at 73 cents? I don't know. But it's going to definitely weaken up, probably test the 87, 86 area anyway. So it'll be really, really interesting to kind of see how this pans out, especially on the energy side of things. I mean, even a lot of people don't even pay attention to heating oil, which is ultra low sulfur diesel. It's diesel is what it's all it is. And heating oil actually has been correcting back a little bit as well, which the truck drivers love that. So it'll get a little cheaper for them.
Yeah.
But I mean, one thing I think we need to really kind of keep an eye on is heating oil. And that will tell you, how shipping is going. Are we going to, I mean, our supply chain is still wimped out. I mean, as much as people say it's not, it is. I mean, I've gone into stores and there's still empty shelves in there. And, or a lack of stuff in those shelves. And just because that's, your supply chain. And you're seeing record shipments of coal everywhere in the world now. Everybody's going back to that dirty, nasty stuff. But coal is the biggest thing being shipped right now, in international waters. You have, speaking of natural gas, down at the Panama Canal, you have about 200 ships on either side waiting to go through the Panama Canal because they don't have enough water. They can only allow like 24 ships a day when they usually allow like 38, 39 ships a day. They only allow like 23, 24 ships a day through those locks because they've been in a drought and they don't have the water to fill them up and take it back out again. And they're getting a lot of, evaporation. So, which I don't know why they don't use like, the seawater and stuff like that. Of course, seawater is corrosive. But anyway, but I mean, that's the thing. They have these lakes that they pull the water in and out of. And so you've got a supply chain issue right now. And I think we're going to continue to see that for a while. I don't think they've ever recovered from it. It's gotten better, don't get me wrong, but I think we still have supply chain issues. And if we have decreased, supplies and commodities, we have a supply chain issue. We're going to have a lack of getting things places. I mean, go over to Home Depot. It still costs you $50 for a bag of fertilizer. I mean, when it should be 20, right? But I mean, that's the thing. I mean, you're still having inflated prices just because of demand. And until demand calms down, which is what the Fed's trying to do, is to keep people from buying stuff, which that hadn't helped any, as you can see. I mean, that's the thing. We have to overcome some of these huge issues that are out there, and it's not a quick fix. It's really not. I mean, you're talking about months long trying to get these things fixed, kind of things. And I think when we start stepping back and looking at this slide here of super cycles, I mean, this is a real big picture, and I think it's best, going back to what Jeffrey was saying, is that we just take it day by day. That's all we can do. We can't go out there and say, this is what I think is going to happen by January. Well, good luck with that. There's a lot that can happen between now and January, So why not just take it just a short period of time by a short period of time? Take your 20, 30% out of the market on that trade and on that trade.
Yeah.
You'll end up doing really good by the end of the year.
Exactly. Exactly. Yeah. Well said. A lot of good things there. Hey, Jeffrey, I saw you looking at some things there on your screen. What are you looking at? And, kind of, looking at some levels, even on the commodities or even on some different stocks. And then maybe you can even switch gears a little bit, because some people are asking about, what you're doing to,
Yeah.
get these really great return, or, this 100%.
Yeah. So, I mean, here's Vail, Vail SA. That's not a bullish looking chart. Let's be honest. I mean, it's got some stuff to do to get worked out of here. Even FCX, like everybody's like, oh, FCX has been rocking, on a small scale, sure, but it's lower high right now, and that's still kind of bearish looking. If we want to be honest about it, that could be part of a bigger correction, and it's not all that different than the copper chart. Yeah, if I give it a second here. Lagging. There we go. I mean, it's not all that different. We went a little higher on FCX, but that's still not the most bullish looking chart, if I'm completely honest about it. I mean, technical levels is, I was just popping through different stuff while we were talking there, and I had like gasoline up and different things. And if I roll down my list here, grab the gasoline chart, the breakout I was talking about happened. Come on. Think about it. Load it up. Here we go. Right up here, we were near a breakout level just a couple weeks ago, back early August, and we jumped back down. And what that does is it kind of backtests that little bit of downtrend of highs there. We broke out. We backtested. That could be a launching board. Could be a springboard. So I'm definitely watching that. Keep an eye on it, because that could launch higher, especially if oil keeps the pressure up. Now, a lot of people think oil and gasoline have to fly together. And as Geof Smith was saying, they don't have to. I mean, they can trade completely independently. The price of oil could be sky high and the price of gasoline dirt low. It's, there is somewhat of a 2-week lag in gasoline, kind of, edge along with oil, but that's kind of one of those we were talking about last week, correlations that exist when they exist and don't when they don't. It's one of those rules of thumb that can get you in trouble and lose your money if you're betting on it. So
let me put this in real quick so people kind of get this in their brain real fast. Let's just think about the EIA Petroleum Status Report, the crude oil inventories that come out once a week. We had a draw of 10 million barrels in crude. So everybody thinks, got to go up. Well, if you have a surplus in gasoline and a draw on crude, do you need the crude to make gasoline? No. Right? So you might see crude pop up and gasoline move down, go inverse of each other on that piece of news. So always don't sit there and they got to go up together and go down together. Sorry, I had to break that in. I just wanted to understand that a little bit.
Yeah, you probably have more different ways to say the same thing. And a lot of this, crude is breaking out though. Like that is, it's undeniable right here. We're breaking out for the year. And I currently have an expectation that we may come up to this 93.50 level where we topped out back here in October, November. Yeah, there we go. Chart being slow loading for some reason, but there we go. That big blue level. Now we do have resistance at like 87 and 89 on the way up there. And we may kind of do this ping pong thing where we kind of bounce up, retrace, bounce up, retrace before we ultimately get up there. And it could take us into early next year before we get there. Just depends on what shakes out in the geopolitical environment. And I don't necessarily believe that all these things move based on news. My price pattern is saying that we're probably going up to 94, but this may be the path we go to get there. We have OPEC meetings to get through, OPEC plus meetings, Russia news, Russia war with Ukraine, China getting in the mix. I mean, all this stuff can make headlines one day or the next. Funny enough, you can pull a CNBC headline that says, oh, the Russian war with Ukraine made gas prices go up. Oh, the Russian war with Ukraine made gas prices go down. I mean, which one is it? I mean, it doesn't move on that kind of news. So even though you kind of, we love to latch onto it as humans, the price patterns are the price patterns. We're moving it subconsciously, whether, in mainstream media, what they call it, curates the news to what they think we're going to pay attention to. They love to grab our heartstrings and pull us in, because it's an advertising and entertainment business. And if you think of news like that it's entertainment, then you start to understand more why it doesn't move the markets like we think it should.
Yeah, exactly.
That's my kind of 2 cents on news.
That's good. That's really good. Hey, a couple people asking what that yellow squiggly line is on your chart. If you could explain that, please.
This big yellow line through there, unlike, Tom gets on me for calling it the market roadmap line, but it's the market roadmap line is what I call it. I came from a different place than DTI. I call it my market roadmap line, and it's a combination of the 144 and 169 EMAs. If you want that thing, it's like $5. You can go to jeffreytrader.com/roundtable and get a one-click button and a watch list that price tends to bounce right off of it. That's what oil did right here. If I zoom it up, you can see we bounced right off of that thing. Came down, touched it 2 days, and then launched off. And it happens over and over and over. It's a pattern I watch in the markets, especially on a daily chart. It's super easy to watch. Price tends to find support and resistance off that line. When we were underneath it, we came up and got rejected right over here back in July. Came up, rejected right off of it, hung out there for a week before we could break through, got through, came up, came back and retested it, and then took off. And so it's a highly reliable, if you just had to have one thing on your chart, that's the one thing I have on my chart, as you can see. And then I draw a bunch of other crap on there, but
that's good.
That's the one indicator I have on this chart out of all these other things I've got turned off over here. That's the one indicator I keep on there because I believe it works, and it works on all time frames. It's not just a daily time frame thing.
Cool. That's really cool to be able to, because that's really cool, Jeffrey. I didn't know that it worked on all time frames.
Yeah, it's fib based. If you heard what I said, it's a 144 EMA. That's fib based, and there's a reason. Like it goes into higher level nerdy crap, and for those of you that really want to follow me, get the all access trader pass, and I'll teach you all my nerdy crap about the markets. But if you just want to keep it simple, market roadmap, $5.
That's awesome. Well, thanks for sharing all that, Jeffrey. This has been a really good show. We've got just a well-rounded discussion today, a lot of good education. Let's keep things moving. Let's switch over. Geof Smith, how are you regularly pulling money out of the market? I think you have some things to show us, and I'd like to see some ways that you are trading stocks.
Well, actually sticking with commodity stuff, I guess. Here. This is one that I like.
That's great news. That's neat, Mary Jane. Mm-hmm.
This is UEC. And get this out of my way here. This company is actually out of Corpus Christi, Texas. They actually specialize in uranium and titanium. And I've been kind of keeping an eye on them, and then I forgot about them. And when I saw them over here just kind of chewing around, I was just like, yeah, I'll check them out later on, and blah, 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 blah. And then it went off my radar for whatever reason. Then I thought, hey, I wonder what that thing's doing. And all of a sudden look at it and go, well, look at that. It went up another $1 from where I was just thinking it was doing. I think this thing has potential of continuing to moving up. And one thing, if you're just wanting to kind of dabble in it, I mean, you can buy a January $4 call on this thing for like 85 cents or 80 cents if you're just wanting to kind of play with it a little bit. But it like I said, I'm liking the uranium guys right now. I think there's a lot more talk of trying to get some of these little reactors and stuff like that moving along through here. So I'm been watching some, the uranium folks and everything like that. Just uranium itself, I don't know if it's all that great, but some of these companies are doing pretty well. So I think this is one that, you can kind of look at. If you can get above $5, it'll probably try to move up to about 6.5, 7. So hadn't done that yet, but just kind of looking at it. I think it's going to be doing pretty well. It might be getting a little toppy with the rally that it's had, but if it gets back to right around 430, something like that, it might be a good way to just kind of scoop it up and let it go. Mm-hmm. So this is a UEC chart. That is correct. Uniform Echo Charlie.
There you go.
So, but outside of that, as far as, just trading in general, it's kind of interesting this time of year. I have a big tendency to back away from my normal commodities, my cattle and grains and stuff like that. I have a tendency to just kind of pull back a little bit. We're going through summer. It's really interesting to kind of see how the summer affects things. Once September into October start coming around, then I start going back into the grains and the meats and stuff like that and start trading throughout, the winter and the springs. But usually starting about August, especially August, July into August, I kind of back away from them on a swing trade basis, trying to get a bigger trend out of them. It's not to say that I won't sit there and turn around and see soybeans getting to 1406 and buy them, see if they go pop into 1420 that day. But that's just what I'll do. I might day trade something and call it good. It's really, really difficult to day trade meats just because they have a very, very short time frame of trading. The other stuff you can do pretty well, but I do like always like trading gasoline or crude oil or something like that. I wish they had a smaller contract on gasoline. Gasoline, it's kind of weird. Gasoline, everybody uses gasoline. Of course, everybody uses crude, don't get me wrong. You don't go to the Shell station over here and pick up a barrel of crude, right? Or even a bottle of it. You don't. You go over there and get gasoline or some additive to it. And yet more people trade crude oil than they do gasoline. So I always like trading gasoline. It's a lot more volatile, especially on the EIA petroleum status report. So that kind of a news relation, I'll trade it a lot. But just to kind of try to hang on to it, I do not do that. Now I'll do that with crude. I might do options on crude or something like that on a longer term basis, but there are no options on gasoline anyway. So, but those kind of markets that move around a lot, I'll play with, on a shorter term basis. Going into the fall, though, I might be looking for something on a longer term basis. I'm always looking at, the metals on a bigger picture than I am a smaller picture. And just because they usually have a longer sustained move in the metal markets as they do any others. And they are affected by some newses, don't get me wrong. But I think overall people are, you look at, like right now, the central banks are, buying up gold like crazy, which you've heard that for how many years, and it doesn't seem to affect it. But I'll guarantee you this, if you look at, what gold and silver have done, if you look at year to year, usually silver outperforms gold, percentage wise in a year. However, if you look at what silver did and gold did, gold ran up to what was it, 1900, silver went to $50, silver dumps off to $12, gold went down to what, 1100. So, and when it got down to about 1050, I was just like, we're at a point now where all the central banks are long gold. They will not let gold get below $1,000, I guarantee you. And they didn't. And you won't see gold below $1,000, flat out. So if it gets back down there, buy all the gold you can, because they're going to keep it above 1,000, because that's where all the central banks are long from. Good. So, but definitely keep your eye on that. But I don't think we'll probably see that for quite some time. In fact, it wouldn't surprise me we don't see gold and silver just take off and run. Now, $34 on silver, I don't know. That's what Jeffrey was saying. That one, there's my challenge.
There's a challenge.
Hey,
Jeffrey, can you get silver to 34?
We'll come back in 2025 and we'll talk about this, Jeff. Yeah. And mark this down, Celeste.
I will.
Put us on the schedule.
But it wouldn't surprise me we don't go back up to the $27.5 to $30 area. That wouldn't surprise me at all.
Challenge is on.
But if we get to 34, I'll take
you have to buy Jeffrey dinner.
That's right. I will.
It's on the recording. You said that's right. That's good. That's good. Well, it's been great being together here and getting all this information. Let's, Jeff, give the folks a way that they can, Geof Smith, how they can keep up with you and what you're doing with some stocks and things too. And yeah, there's a replay that's available. You can just go to the website at atptraders.com. I'll type that into here to the into the chat while Jeff is getting ready to get started. So take it away, Jeff.
There we go. So I do this thing called 12x Trader. I know some of you are with me on this, some are not. And basically each month, I go out and try to find an income trade. Basically, I'm selling puts or put spreads, call spreads, whatever it may be. I in the email that I send out on this thing, I put all the information that you should need to place the trade. When it expires, where we're getting in, where our risk is. If it gets to a specific point, we'll just bail the thing. I try to be as crystal clear as I can when we get into it. It's a shorter term trade. It's basically that same week, but I do I say the first week of every month, but if we have a weird week, I won't do it. So I might wait a week. So we'll run into months that way. So just beware of that. Here's my track record. It's not 57 perfect.
58,
I apologize.
58.
Yeah, 58 perfect. I lost one here. I mean, there it is. But for the most part, and you'll notice most of them here are on the ETFs. They're easier for me to check out. I actually have a whole page of just ETFs. I know Celeste does too. I think I copied hers.
Yeah.
So, but I have just a thing of ETFs,
recording.
and I look for the strongest ones and the weakest ones. And I have done in the past, I have done an individual stock every now and then. Don't get me wrong. This is just looking at the past year. But I will usually use an ETF. So, we have a 12x masterclass. There's actually a class that's in there that you can go in and look at. What it does is it kind of teaches you how to know what we're doing and how to place the trades. But it's a very, very good learning if you're not real good in options. Another thing, we actually have options education in there. We have Tom's books that you can have. You got 3 of them. Nice little weekend reading. If you want to. Winning the Day Trading Game, that's his first book. It's the best one. That's my preference. But it's the life and times of Tom. It's how Tom got to where he was. And there's some very, very good experiences in there that he goes through to overcome to actually get back into trading. I mean, the crash of 87 basically made him bankrupt, but he refused to file bankruptcy. And of course he took the hard way out, but made him a whole lot better trader than he is today. Also we have something called understandable options, and you will not hear my voice in that. You will hear Celeste's voice in that. But it's it's a 15 lesson option class that takes you from not knowing how to spell the word S&P to understanding how options work. The only thing that you'll need to do after this is get your feet wet and go click and see how they actually work. But it is a very, very good options class to go through. I strongly recommend you go through it, especially if you're a beginner. But if you've been trading options for a very, very, really long time, you'll probably find some very valuable information in there. I'll be releasing the next 12x trade next Tuesday, right after Labor Day. We'll kind of see what we look at coming into this. We'll try to see what the trends are coming off of the holiday. If you want to join, it's a whopping $12 for 1 year. That means it's $1 a month. You'll probably make up for on the first trade. That's fine. But I put one out at the beginning of every month. There's no text messages. There's no telegram. It's just an email that goes out every month. I'll give you all the instructions for it, and we'll see how it goes into the end of the week. And it's just basically a quick income trade that you can do at the beginning of each and every week.
Love it.
So
that's fantastic. I mean, for $12, that's unbelievable. $1 a trade, basically. And I love all the did you do the recordings with those two, Jeff? Do you send a recording out with that, or do you just send it?
I do not have a recording. Maybe I should do that. It might be interesting.
Yeah.
But no, I like my trade of the day is what you're kind of asking about. I put out a video with it. I might do that on this. That's not a bad idea. Haven't
He
even thought
would be
about that.
phenomenal whenever you can hear Geof Smith talk, and when you can follow in his footsteps to trade. I mean, I don't want to tell Geof Smith this, but he's a mastermind at this trading. You know, he taught me so much that I know and I still use today about all the markets. I was in his classroom, I was his student, and it's just phenomenal. And I didn't pay $12 for it. I paid a lot more, Geof Smith, but it was worth every penny. It was worth every penny. And all of you guys, that is such an incredible deal to be able to get in there with Geof. So yeah, do that recording, Geof Smith. That'd be great.
Yeah, that'd be good. So, but anyway, come join me. We'll start up on Tuesday of next week, and we'll get into something. Don't know what it is yet. I don't have a crystal ball, but we'll make money on something and kind of go from there.
That sounds great. Well, that'll be perfect because that'll be the first real day back, you know, after the holiday, first real day of trading. I mean, everything's closing down today. It's Friday, but it's also the first day of the new month. But we come back after that holiday. It's going to be interesting to see what Geof comes up with, because you're going to be looking at the futures. You're going to be looking at all that, but it's an ETF. It is not futures. It's an ETF, right?
That's correct. Yeah,
absolutely.
I use ETFs and stocks.
Mm-hmm.
And just kind of looking at crude oil, hint, hint. It might be something in that market.
Hint, hint, hint. Get in, get in.
Yeah.
Great. Well, thanks everyone. Thanks for being with us. Geof and Jeffrey, thanks for coming in and sharing all that great stuff with us. We love it. It's awesome. Thank you, Jeffrey.
Yeah, no problem. I'm glad to be here. You know, Tom told me he wouldn't even sell me those 3 books for $12. This might be a deal.
Yeah,
that's Tom for you.
He says, go to Amazon and buy them, right? It is a great deal. It is a great deal, Victoria. So,
You know, it's really funny you say that. About 2-3 years ago, he had me go on Amazon and buy every single one of his first books, the Winning the Day Trading Game, because he enjoyed signing them and sending them out to people so much. He wanted to get all the books he can so he could do that, and actually found signed books on Amazon. So they're back out again. He recycled them.
Recirculating.
Yeah.
That's good. That's good stuff. Well, really, really great stuff. Very well-rounded conversations today. Thank you. Thank you. Everybody have a great Labor Day weekend. We'll see you back next week for Ask the Pros, and be safe and have a good one.
All righty. Good seeing you.
Bye for now.
Bye-bye for now. We'll see you. Rochelle, you probably need to get with a different customer service on that one.